This is the Clear Money Talk podcast, offering up creative solutions for your retirement future through education, choice, transparency, and empathy. Now, your host, CEO and founder of Clear Financial Partners, Tim Claremont.
Hello. My name is Tim Claremont, and welcome to the Clear Money Talk episode podcast. I have absolutely no idea what we're going to talk about today, which is very exciting. But I always have a good time answering money-related questions and helping teach you something smart about money. Joining me, as always, our co-host, Tyler Andrews.
Thank you, Tim, for the introduction. We're in the podcast studio recording another podcast.
Yes, we are.
We're excited.
Yeah, we are excited.
Yeah.
Actually, it's funny. I was just having a conversation earlier today with various compliance officers. You know, compliance is very important in our industry, and we always want to make sure that we're very careful in communicating information to everybody out there. We want to make sure you're doing the right things with your money. Your money's a big deal and matters a lot to us. So in that process, just being very careful with our language is one of the things we were discussing earlier today. So if you notice any particular additional cautionary commentary, then that's what that's from. It's things like we're not attorneys, so we can't provide you legal advice. We're not accountants, can't provide tax advice. Past performance does not necessarily indicate future results. All those good things that we need to communicate. So we're noodling on that. To that end, I have no idea what we're talking about today.
Well, you're about to find out.
Tyler
quick.
has chosen, so here it comes.
You're about to find out.
What
quick.
are we talking about, Tyler?
Okay, so we've been getting this question a lot from clients, and with the interest rate market that's constantly changing and evolving, and with interest rates, hedges start coming down based on what Fed's recent announcements. We've been getting asked the question a lot about refinancing your mortgage. So the question I wanted to talk about with you today, Tim, is now the right time to refinance your mortgage? Now, obviously, this question is going to be unique to each and every one of our listeners, right? Your mortgage, your situation with income, debts, assets, and everything else is going to be unique to you guys and be different for most likely anybody else out there, unless you got a doppelganger that's doing the exact same thing as you and you don't know about them. But besides that point, if that's not the case, this is going to be unique to you as a listener, but I think we can at least get some general guidance on maybe reasons people consider refinancing, how it might benefit you to consider refinancing, and just kind of give some general guidance as far as that stuff's concerned.
Yeah,
what do you think?
That's an awesome question. I love it. It's great. I'm laughing because when I have to give speeches at various places, like I'll travel the world. I've given speeches in Singapore and Sydney, Australia, and all this stuff. One of my Australian friends was a financial advisor, was telling me right before I went up a speech that I needed to, they had a game that they would play where you have to integrate a weird word into your speech that has no place in your speech. And they gave me the word haberdashery, which I remember, haberdashery, actually it was, which is like a hat selling store or whatever. I guess it's not like a real big thing, I guess, here in the United States, or maybe it is, and I'm just not.
I've heard of it, yeah.
Yeah, okay, good. Anyway, when you just used the word doppelganger, I was like, who convinced you that you needed to use the word doppelganger on our podcast today? Because that feels very planted, but at the same time, it's not. That's just the kind of
kind of the right word at the right time.
Individual that Tyler Andrews is, and he's got that kind of vocabulary. So anyway, having a good time as always with Tyler. So let's get to the meat of the question, which is should you refinance today, right?
Yeah.
And that's basically the gist of it. And,
I was going to say I think a good place to start is maybe why people make the decision to refinance. I think many of our listeners out there are coming from all different walks of life and different stages in their financial knowledge, as far as where they're coming from. So some people might not understand what refinancing is and why people do it. Some people are like, you lock in a mortgage, you pretty much just ride that thing all the way out till the sunset. That's not always the case. Some people do decide to refinance a mortgage and basically trade in their existing interest rate on their mortgage for a new one. And why people do that is going to be unique to them. And, maybe we can talk through some of the pros and cons and why people choose to do it.
Yep. Fundamentally, refinancing your mortgage is something that people usually will consider doing when they either want to, one, improve the interest rate, or two, get equity out of their home to use that equity for something. So, for example, if you bought a house, let's say you bought a house for $500,000 and you put down, $50,000. So you borrowed $450,000, and maybe you did that 5 or 10 years ago or whenever you did that. The house might be worth more today. It might be worth $700,000, and your loan might be lower. It might be $400,000 instead of $450,000. So all of a sudden, if your house is worth $700,000 now, and your mortgage is $400,000, you have equity built in of $300,000. And you might say, you know what, I need to use some of that money to do something, whatever the something might be. Now, the something might be doing a remodel or fixing your roof or something along those lines, like home repair, in which case you can either get a home equity line of credit or a second to tap into that equity, which will be at a higher interest rate. That's if you don't want to refinance your first mortgage. So like if your first mortgage is at a low interest rate of 3% or something like that, even in this current market today, we can't find a mortgage like that. So you wouldn't want to refinance a lower rate to end up with a higher rate. That's going to hurt you financially. So you might get a second or a home equity line of credit to tap into that equity. However, if on the other hand, your interest rate was high, maybe you just bought the house a year or two ago and interest rates were pretty high these last couple of years. Maybe you bought that house at a 6.5% or 7% interest rate, or maybe your credit wasn't that good and you had to pay a higher interest rate even a few years ago when interest rates were lower, and maybe you have a 7 or 8 or 9% interest rate on your mortgage. The reason to refinance, the main reason why people will refinance is to drop that rate. So if your rate is 7, 8, 9, and you can refinance at presumably 5.5 to 6.5, you should probably consider refinancing as long as you're going to be owning that property for a long enough period of time for the difference in the interest rate expense to offset the cost of refinancing. Because refinancing has a cost. You got to pay for an appraisal. You got to pay typically the loan origination fees and some other expenses associated with it. And even if the mortgage broker or banker that's going to do the loan for you says, oh, it's nothing out of pocket, that doesn't mean you don't have a cost. Because if the loan balance goes up from what it was when you paid it off to what the new loan will be, that difference between the two might just, if they don't give it to you in a check, then that's a cost. If your loan balance was $400,000 and after you refinance it's $410,000 and you never got a check, it cost you $10,000 to refinance that. So you've got to do the math to say whatever the fee is for refinancing, am I going to own the home long enough that the savings I get by dropping my interest is worth it? And typically the break-even point on refinancing is usually around 2 years. If you're going to own the property for more than 2 years and the interest rate is 1% or more different, it probably makes sense for you to refinance. I'm not saying it always does. You should double check with your financial advisor and actually run the numbers. But as a rule of thumb, if it's more than a 1% move downward on your interest rate and you're planning on owning the home for more than 2 years, then it's probably worth considering refinancing as long as you're getting a fair deal. So that's kind of where I'm at on that. What additional thoughts do you have related to that, Tyler?
I think you hit on a lot of the good points. I wanted to actually get some numbers in front of people so that way we can actually conceptualize and see with like a real world possible example how this might actually affect somebody if they chose to do this. So I looked up current interest rates where they are at roughly right now and where they were roughly 1 year ago. And the 30-year fixed rate mortgage 1 year ago was about 7.5%, assuming good credit and other factors. Right now, the 30-year rate's about 6.3, and this is changing daily. So, take this with somewhat of a grain of salt. But it's about a 1% difference between, now and 12 months ago. If we look at that in a real-world example, let's say someone takes out a $500,000 mortgage on a home, and that they took it out a year ago at a 7%. So we're just going to use round percentages here. Just the principal and interest payment on that is about $3,326, not including taxes and insurance, just principal and interest payment on the mortgage. If that same person were to refinance today at a 6% rate, they would drop their principal and interest payment down to $2,997. It's about a swing of $320 per month additional increased cash flow, out-of-pocket expenditures. So you're saving $320 per month in your cash flow, and the total interest savings over the life of that loan, if that person were to then keep that new 6% loan for the life of that 30-year mortgage, they would save about $118,000 in interest payments over the entirety of that loan duration. So I like to use numbers so that I can conceptualize things. Obviously, 7 to 6% interest rate sounds nice, but I like to be able to say, okay, what does that actually look like in practice? So I just wanted to share that example, so that way
that's awesome.
Yeah. It is. Yeah,
it is. No, those are excellent numbers to give consideration to, and I appreciate that you did it in that way, because this reminds me of a previous podcast we discussed where we talked about paying debt off in the snowball method versus the avalanche method.
That's right.
And if you go back to How to Pay My Debt Off and listen to that podcast, it's a great podcast. And Tyler and I talked about two different methods, where my personal preference was the avalanche method, and I think your preference was it the snowball, or did you also like that? Yeah, it was the snowball. So and the snowball method was all about decreasing your cash flow commitments, which is paying off those smaller debts, getting rid of them early so that you had a lower minimum payment, which is exactly the way Tyler just articulated those numbers to you. He talked about how if you refinance, you drop your cash flow commitment by a little over $300 a month by having your monthly payment drop from about $3,300 to about $2,900 and something dollars.
That's right.
And that helped you cash flow wise. Another way to look at the same problem is along the lines of the avalanche method, which are all about net cost. And if you borrow $500,000 and you save 1%, roughly 1% on the interest on that, you're saving $5,000 a year of interest, right? Because 1% of $500,000 is roughly $5,000. Now, it's not as clean and simple as that, because you pay down the debt over time, so it's a little less than $5,000 each year as you pay down the debt. But the point is, you're saving about $5,000 a year. If you do that for 2 years, as I talked about earlier with the rule of thumb, you just saved about $10,000. And if your cost to refinance was close to $10,000 or less, that's a great example of the rule of thumb working, because in 2 years you're break even on covering the costs. So you saved yourself 10 grand in interest, and maybe you paid 10 grand for all the financing costs and everything else, and including the appraisal and all of that. Therefore, you're ahead money for every year you own the house after 2 years. If you sold that house in less than 2 years, it would have cost you more to refinance. Then it wouldn't have made as much sense. So how long you hold the house is a critical part of that calculation as well. And whether you're using something similar to the avalanche method, where you're more focused on your costs and your interest rate and the opportunity as far as expense, or you're more focused on the snowball type method, where you're focused on reducing your cash flow and having a lower minimum commitment. In either way, there's a 1% move downward over the last year. It's a pretty good time to at least consider refinancing if your rate is still from about a year ago. Again, it depends on how low your rate is. So how low did you go?
How low did you go?
Anyway, we're nerding out a little bit, but that's what we do. That's what we do.
That's right.
Money Talk. So
that's right.
More to add on that concept?
No, I think, I think everyone's situation is going to be unique onto why they might consider refinancing, whether it's to, just attain a lower interest rate, to free up cash flow, to potentially get a shorter loan duration, maybe switching from a 30-year to a 15-year, pulling out equity for whatever reasons you might be doing that. And each of those situations, I think, is going to present its own unique analysis on whether it makes sense for you to do it or not. And I don't think there's a one-stop shop answer to this, but I feel like we gave enough good details for you guys to chew on, to use when you guys, if you're considering a refinance, to bite on and figure out if it makes sense for you given your situation.
There's a lot of eating analogies now.
I'm hungry.
I know. I'm feeling that.
We're eaters over here.
And we are. I wish the truth of that was not so accurate.
It's all right.
But it is true. It's very true.
It is.
So wrapping this up, I think we need to do the just the answer.
We do.
So let's do the just the answer.
Okay. Should I rephrase the question or re-ask it?
Yeah. Let's re-ask the question. Let's go for it, and we'll hit it.
Is now the right time to refinance your mortgage?
Is now the right time to refinance your mortgage? And the quick answer to that is maybe. Which the reason for that is it all depends on what your current interest rate is on your mortgage versus the interest rates available today. And if the current interest rate is lower, what's available today, if what's available today is lower than what your current rate is you locked in on the previous mortgage when you got it, then it's worth considering. You need to do some math. You need to look at the cost of refinancing versus the savings that you have on the interest by doing the refinancing, and then you can run the numbers. But given that interest rates have dropped over 1% in the last year, it's definitely a time to give it some consideration if that the newly available rate is less than what your current interest rate is on your home. That's the quick answer. This one is a shorter, if you listen to the long version, it's not real long. So I would strongly encourage you, if you're interested in refinancing or you're thinking that, maybe that does make sense. Maybe my answer to that is a yes. you should listen to the whole podcast. So I would not recommend listening to just the answer. Go listen to the whole podcast. Get the additional detail there, because there's a lot of really efficiently communicated and quality information that we can provide for you. So the quick just the answer is, if you can drop your rate and you're going to hold the property long enough to offset the costs, yes, you should probably look at refinancing.
Absolutely. I was also going to add, there's a lot of great calculators online, whether it's just good calculators in general, whether you just want to look at a compound interest calculator or otherwise, but there are calculators that you can just plug and play different numbers for specifically mortgages or home equity line of credit. So that way you can see how the lever moves when you change the interest rate, change the duration of the mortgage, whatever it might be, depending on your situation, just to give you a quick snapshot of what a refinance might look for you. So give that a look if it's something you're looking into right now.
There you go.
You ready for some trivia?
Yeah, let's hit it. What do you got for me?
Okay, this is one that sits well right at home for both you and I. Okay. This movie. It's a movie trivia question.
I love movie trivia. That's great.
And we just saw the main character of this movie somewhat recently rocking out with his band.
Oh, okay, all right. I know who that would be. So so I'm already moving in that direction.
Okay.
Yeah, just to share for those people that are curious about. So I am a huge fan of the movie The Matrix. I loved The Matrix. It was fun. And Keanu Reeves, I don't know whatever it is. I think he's cool. I really love the movies he's been in. Love where he's at. And we were at McMiniman's out in the Forest Grove area early this year at a concert. The four of us, Tyler, Olivia, Crystal, and I. And in that concert, it was for what's the name?
Some
of the concert?
Indie.
It was. It's not that indie. He's probably there's some people here that are going to be like fans.
The Way Down You Go song.
Well, it was funny because
we're going to run into copyright issues now.
No, not unless you start singing it really well. It was Kaleo because it was yes, I remember because later on that day, so Kaleo, whatever.
Yeah.
I realized that I was like, I wonder if he made that name up because he's just combined Kal-El, one of my favorite heroes, of course, from Superman, and Neo, my favorite hero from The Matrix, and then he could put Kaleo and create that name. And if that's the case and that's how he came up with it, then he's like a really cool dude.
Yeah.
But if he got it some other way, he's probably still a cool dude. But anyway, we saw that concert, and in that concert, I noticed up there was a band called Dogstar, and I happen to remember from my high school days that Keanu Reeves was the bass player of Dogstar, and I was like, man, if Keanu Reeves is here, I've got to come see this. So, of course, I bought tickets and showed up. And sure enough, he was there rocking it on the bass, and he killed it. It was really pretty fun. So, Keanu Reeves did a great job playing bass. And
who's surprised, man?
It was sick.
He's just good at
it. It was good. Anyway, so apparently I've got a movie trivia related to Keanu Reeves. Long side story, but you get to know a little bit more about Tim and Tyler.
That's right. Okay. Trivia question. In The Matrix.
Oh, okay.
What is Neo's real name before he adopts his hacker alias?
Well, I know his last name because I remember that distinct moment when the agent is wearing the sunglasses and he calls him Mr. Anderson. So I know it's Anderson is his last name. I'm trying to remember what his first.
Well, I was going to give you
Is it Thomas Anderson?
It is Thomas
Anderson. There you go. Look at that. You didn't even have to give me multiple choice, man.
Impressive.
Well, you hit me on Matrix 1. I mean, that's
Mr. Anderson.
Solid stuff. So Mr. Anderson. Yeah.
The guy's creepy.
Not to be forgotten.
Maybe I'll go as him for my Halloween costume.
Oh, there you go. There's some options. That's right. You're probably listening to this after Halloween, but we are recording it prior to Halloween. So by the time you call us to say, hey, we like you and we'd like to have a conversation about possibly working with you, you can ask Tyler if he actually did go as
true.
The agent from Matrix for Halloween, yes or no, or maybe he went to something else. We'll have to wait and see. If you do decide you're interested in having us help you, please do reach out. 503-579-1000. We can book a 15-minute get acquainted call, no obligation, no expense. Just get to know you and see if it feels like a good fit. Obviously, this is what we do. Retirement income planning mostly for people, but answering your money questions is a part of all of that comprehensive planning stuff. So thank you for your time today. Any additional final thoughts, Tyler?
No, just thank you for your time. Hopefully you learned something. You're taking away something, feeling smarter than when you started listening to this podcast. And nevertheless, we appreciate your time and hope you find some use out of it. Check out our other podcasts. Check out our website, www.clearfp.com. Give us a call if you want to chat, and we'll look forward to seeing you guys next time.
Until next time, thanks for joining us on Clear Money Talk.
Investment advisory services are offered through Clear FP Advisors, LLC, or registered investment advisor. Securities are offered through Clear FP Securities, LLC, member of FINRA IPC. Exposure to ideas and financial vehicles discussed should not be considered investment advice or a recommendation to buy or sell any financial vehicle. Past performance is not a guarantee of future results. Investments may fluctuate and when redeemed may be worth more or less than when originally invested. Financial professionals are not licensed in all 50 states. To find out if Timothy Claremont is licensed in your state, please contact his office. Clear FP Advisors, Clear FP Securities, and Clear FP Life LLC are not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide tax and/or legal advice. Annuity guarantees rely solely on the financial strength and claims-paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through Clear FP, LLC NPN number 194283777 and/or Clear FP Securities NPN number 197499604. Any discussion of general investing strategies or specific securities are for conversational purposes only and should not be taken as a guaranteed endorsement or recommendation.